But let's move to the stock of the day, which is Lovisa, often a favourite for the retail investors. And Levisa posted profits of just shy of $70 million. Revenue hit close to $600 million, and Levisa declared a final dividend of 31 cents a share. The jewellery retailer posted a 30% rise in sales to almost 600 million. Net profit was up 16.7% to over 68 million. And shares trading down 9.2%. So, unlike Nvidia, which seems to have surprised to the upside and met those big forecasts, obviously, well, it seems, but let's ask our experts, that Levisa hasn't met expectations. Ben, how are you seeing Levisa?
Yeah, I think there's one of the other, Carl's on something I think there with a short covering, and another commonality I've noticed is there's been stocks where they've sort of turbocharged into the result, and I think everyone's sort of thinking these guys are going to come out and beat and we want to be set before it, and you just get a minor negative, and that can lead to the sort of the share price reaction we've seen today. Yeah, WiseTech was one yesterday. I'm still licking my wounds from that. Thanks, Carl. Yep. And yeah, but this one, I actually think, having, I've only had a quick look at it. We don't own Lovisa, and it's been an outstanding success, this business. You look at those margins, 80% margins, wow. It does play into the current environment, this business, well. It's sort of affordable jewellery. It's doing a mass store rollout globally. It's really hit on a trend. Brett Blundy is heavily involved in the business, is one of the best retailers in the country. But the number came in lower than expectations, and I think it was the trading update they gave for the first 7 weeks of this year was quite a bit below expectations. So that's going to see analysts downgrading their numbers for this year and softening that outlook. And part of that is the store rollout seems to have come in a bit under, and then the sales in the new stores are coming under. So they've actually had negative like-for-like sales growth. Mm-hmm. So I'm going to go sell on Lovisa because I think it's still, it looks expensive even on what will be rebased earnings forecasts.
Okay, a sell there. Carl, how are you seeing it? How's the picture looking?
Yeah, look, I mean, Ben's covered all of the sort of the key points about the earnings, but I'll just talk sort of let's call it philosophically, because I get a lot of questions from clients saying, "Hey, Carl, this stock just reported the most amazing profit. Why is it down 10% today?" And the answer is, Ben alluded to, is it's not about the number that they got. It's about what the market was expecting that number to be, and the outlook is the main thing as well. So Lovisa's disappointed mainly on the, not so much outlook, because I don't think they gave us one, but it's mainly on that update of how they're going to kick off this financial year. So the market is a fickle beast, and if you miss by just a little bit, you can see big moves in the share price, and that goes for on the upside as well. So don't just look at $1 billion headline number and say it has to go up. That's not how the market works. For Lovisa, we got dragged into this. And I say dragged into it. If you go check my tweets during the week, I had a bit of a discussion with my followers about whether we should add this to our short list of stocks we look at. And just from a technical perspective, it had that huge run up, which we participated in. We then got out of that and pulled back. And this was the first time since that pullback that we were looking to add some risk back to Levisa. It's just terminology we use. The way I see all investing is just risk. Every time you buy a share, you're not buying a share. You're not buying security. You're not buying safety. You're not buying a dividend yield. You're buying a ball of risk. Understand that. Shares are risk. They're not safety. You know what safety? Cash is safety. Maybe we could say long-term bonds, government bonds are safety, maybe, but cash is safety. Shares are risk. So we did add some risk to this. It was the 21st, 22nd, so last couple of days, and then we got tagged today. So for people that do follow me, we know what we have to do now. There's no negotiation. It's just take our lickings and get out, because the candle that is created by today's price move is the opposite of what we want to see. So we would be what I call a zero risk position. That means we have no holding on Lovisa. Now, if you do hold Lovisa and you're looking for a buy, hold, or sell from me, well, then that implies with me not having any holding on Lovisa. Therefore, if you've got it, I'll let you make that leap to connect the two dots together.
Fair enough, but really good points covered there in so much. It's always about Not so much what was in the rearview mirror, but what is happening going forward.